Hi, Ron. Wednesday is upon us. We're midweek already. It's November the 5th. It's we call it bonfire night here in the United Kingdom. But celebrating the night or the day Guy Fawkes tried to blow up the Houses of Parliament many hundreds of years ago, unsuccessfully. But anyway, politics remains top of the talking shop. Today we have a democratic socialist as the new mayor of the mighty city of New York. So and throwing a gauntlet down directly to the president, President Trump. So see how that's not going to end nicely. He's only 34. He's got some great ideas, or great socialist ideas, one would argue. Trump's called him a communist already. He's not a communist, but anyway, let's see how all that pans out. Obviously, Trump's city is New York as well. A man born and bred in Queens. Anyway, that's for future. This morning, today, services PMIs globally have been actually quite positive. They're all come in a bit stronger than expected. I hope you can see that on that chart there. We've got the key private payroll data in about 10 minutes' time from the ADP for the United States. Obviously, we've not had any non-farm payroll data, official data, from the government since the shutdown started some 30 odd days ago now. No signs of that coming to an end. Obviously, the next big caveat is some of the food stamp payments that's due to come out this week. I think it's today, some of them as well. So that doesn't seem to be on the agenda for the president now. Obviously, last week he was doing his Asian tour. So that sits in the background. Nervous markets yesterday. We had a big sell-off on the Nasdaq in particular, 2% down. The tech stocks took quite a hit yesterday, but they've had a massive rally. I mean, this is a healthy sell-off if we get even more weakness over the next couple of days. But excuse me, I'm not feeling 100%, so drinking lots at the moment. Is what's on the order. So ADP unemployment. So services data better here in Spain. You see 56.6, 54 in Italy, 53.9 from 52 in the key German number. The services number 54.9. The composite was 53.6, pulled down by the manufacturing data early in the week, but 54.6 for services, much better than expected. Much better than last time at 51.5, a tick higher than expected. In the UK, numbers were also better than expected, not as good as Germany, but 52.2 from 50.1 and 52.3 from 50.8 for the services number. So composite also better than expected. So overall, good data. We've still got a stronger dollar this morning. We did have a stronger dollar this morning. It's a stronger dollar yesterday. It's weakened a tad, and those tight stop losses we had on our trades have been triggered overnight this morning. Euro, Aussie, and Kiwi all hit their very tight stop losses, so profits bagged on that one. And all four trades from last night also hit target ones. When I automate those overnight trades, let me just show you what I'm talking about. We'll come to the data in a minute. When I automate these and I go to bed, I'm showing my trades. These overnight strategies from last night. Sorry, these ones, when I put these on. The also ones are the ones I either automate that if it hits target one, the stop loss automatically goes to the entry level. Otherwise, I check them manually. These three here, that when it says also, this is a standard end of day trade, the Eurozone, but it did the same thing as well. Euro, Kiwi. Anyway, let me explain. So the sort of the set and forget type of approaches with these numbers in here. These are the actual these are the stop loss and the target levels that are set in my trading platform. And what happened with all of these, in fact, is they all hit target one overnight. What that does then, with the way my systems trades, is that the stop loss comes right up to just around about the entry level. So if the trade then reverses quite quickly, which they all did actually overnight, it closes the other half of the position. So If I'd just left these as they were, I'd have been twice as many pips in the bag. But I like to once these trends start to trigger, they can run. That's what history has shown me. So I tend to take half off and then manually move the stop loss, as we've been doing yesterday with the other trades as well. Dollar CAD is still open, and we moved that up again this morning. So anyway, they all reversed. They got to target, then they reversed to entry level, and have all been closed for half a position. So this morning we've had a grand total of 128 pips on these trades that have closed this morning. So euro, dollars closed, Aussie dollar, and Kiwi dollar all now closed positions, and these were the ones from last night. So as you can see, there's wrote down earlier what actually happened overnight. Pound CAD, that was a manual that hadn't hit stop loss or its target. But when I checked early this morning, sort of 7:30 time, it had gone against me from when I'd opened last night. Actually, if you have a look at that, it's a bit of a funny one. It made me smile because it is my bogey, or had been very much my bogey pair, pound CAD. But we've had some really good winners on that this year, and so it doesn't feel like my bogey one anymore. But if we go on the hourly time, we got in, I think, right at the bottom last night, right about 9 o'clock. I think we got in. I can't remember the actual number. We were filled with what was it? We were filled pound CAD at 183.52. I think it's actually below the levels on here. 183. Yeah, it's reversing right at the bottom. So we're on about here. We got short last night, reversed instantly into close. Obviously, I woke up this morning. We were up here somewhere, and I got out at 180. I can't remember what time it is. Anyway, we got out again because the target was down here. The stop loss all the way up here somewhere, but I closed that manually this morning for a loss of 35 pips. So the others all very successful overnight, and they're all closed. The only position I still now have open is this long on the dollar CAD. And the stop loss at 11 o'clock got moved up to 141.20. Let's have a quick look at that before the data comes out in the next minute or so. USD CAD. USD CAD. Those of you with sharp eyes will notice that this is my crossing EMA strategy we got on here. And the reason is that good old Trade Locker seems to have deleted my, as I've just logged back in now before I came live with you, the charts with all my lines on, all my price levels on my mean reverting strategy. The stochastic and Bollinger Band strategy has disappeared overnight. So boo-hoo Trade Locker. But anyway, this is a trend following, and that's where we are. Let's just stick the 141.20 it was. That's where my stop loss is now on this long trade, 141.20. That's my stop loss for this long trade, which we got in at 140, I think, basically 140. It wasn't there. Don't know what these lines are doing on here, but it was one. Let's get rid of that. It was one. I think one. It was 140.80. 140.007. It was. I remember that 007. That's not the entry. Was at 140.007. I think back on the 30th some time, wasn't it? Or 31st somewhere. I think it was the 30th late in the night. I can't remember. But anyway, it's been long. We're taking half the position on. We're still trading up. So that's the entry. That's our target. Sorry, we haven't got a target. We're just pulling the stop loss up behind it. So let's have a look at how the ADP data has dropped. We were expecting about 32,000 positive from a decline last month. It's been, quite volatile, but this is the first hard bit of data. It's coming at 42,000. So it's 10,000 better than this investing.com calendar was expecting. Where's it gone? Tuesday. It's Wednesday. Here we are, 42,000. So it's significantly better than I expected. Obviously, it's some estimates. I think the Reuters poll had only 28,000. Or might be in a Bloomberg poll. I can't remember. But it was less than 30,000. I think the other polls had 32,000. Remember, ADP is a private payrolls company. They run the payrolls, literal pay slips that people still get for big corporations in the United States. So it has a relatively good handle the job situation. But obviously, that's quite weak from where we have been. If we, I don't know if this is going to show. No, it can't show me the old. If I just bring in FinViz, if we just look at the data on that one, actually. ADP, and you see the ADP number here. It hasn't actually updated it yet, but it should do. You can see, the weakening, the story we've had over, or the weakening of the jobs numbers, and this is clear here in the private payrolls, and negative here in June. It was negative for August, negative for September, and we've come in positive. I don't know why that hasn't refreshed, but probably because it's 15 minutes delayed. This free data. No, it still hasn't come in there. But anyway, take my word for it is there. It hasn't updated on that one, but we'll close that. You can see it on our calendar here. The numbers come in at 42,000. That should have lifted sentiment a wee bit. If we look at our open trade here on the 5-minute time frame, indeed it has. It's lifted the dollar to the upside. So dollar CAD has moved from 141.25 to 141. 35, so a 10 pip gain for dollar CAD on that, and I say it's not the biggest mover. For all you crypto enthusiasts, obviously a big number yesterday was the breach of the 100,000 overnight. We've been monitoring this weakness for a while, haven't we? And dollar Bitcoin itself went under 100,000 last night. That's the 5-minute time frame. Oh, this platform's doing my head in at the moment. So there we were. So 1, 2, 3 or 4 hours we were spiking under the 100,000 level. The decline, we had, remember on my other chart, we had this pivot area through the key 112,000 levels has given way last week or so. It's been a weak November for Bitcoin. If you look at the daily time frame. It's been under, and again, this strategy would have been long here in the end of October, and then reversed and went short there right just before the close of October on the 29th, as it went under the 21, the 5 and 9, all crossing on the same day, the 29th, and it's gone down, retraced for a few days, and then big down day on Monday, and an even worse day yesterday as we seem to inevitably charge into that 100,000 level. Where we got some buys last time was around about these lows here, this 106, 107 level. That didn't happen yesterday. So you look further to the left, and you can see the psychological. Although it is a big round psychological number, it hasn't acted as an anchor. Either a target or a pivot area. You see here as we went through it on the way up, it was a daily candle that just burst through the 100,000, didn't stall really. And again, each day it's just, so it hasn't played out, more like these 102,000, the 106 and 7,000, that 112,000 I was pointing out to you earlier. But that's it's been a weak move for Bitcoin. The trend is still down, but we've bounced today. Clearly buyers at that psychological 100 level overnight yesterday, and again this morning, and we've moved up, and it's just in the last hour we've edged back over the 20-hour moving average. So that would have triggered a long on this strategy from quite most of the Asian session and the European session consolidating, and then a move up, and that would have triggered a long here on this 1 hour trading approach at 102 at top of this candle here, 102 580 on the hourly basis. So we're sort of positive today. If you want to trade, if you're trading this on an intraday basis, that's a nice positive day from the lows. We try your trend line from the hourly chart is sort of through there. Rising wedge to the upside today. So that's the key break. That might be its move, but it can move a long way. $1,000 is the typical move over the last 14 days for Bitcoin, and how far we moved today? Well, nothing like that. So we've moved 102 to 102. So we moved about 300 or 400. So there's still plenty of momentum potentially. Sorry, daily. That's the hourly, wasn't it? In this one today to the upside. So traders may be adding on that. The 4 hour may have turned around. No, it hasn't turned around as it's 20 period. They haven't crossed at all. So the hourly is long. The daily is still very short. Look at the daily. Big down days this week, which is bouncing off the 100,000. So on a short-term basis, it's looking relatively okay. So the hourly was positive. 15-minute will be positive as well. Much more choppy, as you might expect, up and then consolidating down. Last move higher was this one here at 11.45, moving higher as well. And for you scalpers of the mighty Bitcoin, and obviously spreads are a bit more aggressive, a bit more difficult to trade with. But you know, if you're trading short-term trades, you've got to take that into account. That's been, I say, long from 11.20. And off we go, and it's closed out there. So that would have been a cross. First cross was there actually 11. Yeah, that 11.20 candle there where we've got the 5 and the 9 crossing and above the orange 21. So we've got 21, 5 and 9 all nicely aligned there on that 5-minute chart from 11.20 all the way up, and we finally again, depending on how you're trading this, you can trade your stop loss up behind it, and it would have taken you out as we've turned around here, or you wait till the candle closes below the mid moving average, which is the 9 period there, the pink one, and you're out there at 102,400 from an entry here at 101,600 for the sake of round numbers. So that's a nice run there on that 5-minute to trade. So yeah, so the main news is obviously the weakness in crypto, Bitcoin leading the weakness, but buyers at 100,000 today for Bitcoin. Oil remains moribund. WTI at 60, under that key 62, and Brent at 64.50, under key 65, but still pretty weak. There's the oil market in the last hour or so. 5-minute time frame again, choppy today, but again, can't hold 62. We had a brief spike early this morning, and we were back down again today. So oil remains week. I say Forex. Look at the dollar. It's say it's given back some gains. So the euro consolidating at under 115, 114.80 at the moment. We were I can't remember what the final stop loss was on that one, but we reversed out as it's ticked back up this morning. But the trend is still with the dollar, isn't it? You can see that not hourly trend. The trend is still very much with the dollar. The euro can't break over this 20-hour moving average here so far today. So, but we have got a bit of a sort of a consolidation there. So the absolute low we've got to yesterday was 114.73.50. Today's low is a tad higher than that, 114.75. So again, the 5s and the 0s coming into play again. So 114.75 is our low of the day. The high of the day, the range so far today is 114.98. So we can't get back over 115. So again, you can see the bias is to the downside. We've had a tick here over the 20-hour, but the data on the positive PMI data this morning out of Europe, but that ADP number being a bit stronger has lifted the dollar a tad in the subsequent 10 minutes since the data came out. Let's go back to the 5-minute. There we go. There's the first. That's down again, retrace, and then we're down again. So we're still moving to the downside. So we're in line with the hourly trend. So that would have been an entry there. Some 5 minutes before the data, if you were brave enough to take that with your stop loss up here. It's sort of very horizontal moving averages there. It's not a trend, a trend I'd be quite jumping into with full flavour, but the higher time frame trends still remain in a sort of consolidation zone as well. So it's a non-trending. It's the one where we could do with our Bollinger Band and stochastic setup on that one. So dollar remains sort of on the front foot. Dollar yen 152.82 again. So dollar coming back again today from a bit of a weakness yesterday's into closing earlier this morning. So again, another one that's moving higher. Next resistance would be this top candle here at 154. So there we are, 154. We're at 153.85 at the moment. Another 15 pips to the upside potentially. Looking a bit stretched here, but it's been short. First long, then we resisted, but again, strictly your stop loss would have been there, your entry would have been there. We're now moving higher. I'd have had my stop loss now round about the blow of this candle. Now we've moved higher on this hourly basis. So the low of the 9 o'clock candle having triggered long at 7 o'clock on an end of hour basis there on dollar yen, and that's in the money. So dollar up against that. We saw the CAD earlier, didn't we? We were 141.20. That's our stop loss. No, long trade. Euro we had a look at. Aussie back under 65.6485 this morning. So again, another one. Aussie trying to come back, but the dollar with the upper hand again this morning, and down, and not getting and breaking 65 from yesterday's breach of it. So far today, low last night took us to 64.60. Let's want to look forward. So again, downside. Sterling 130.40. It's looking a bit peakier on the back of the service PMIs earlier, but then it's sort of chopped around again. So 130.50 is the resistance for a sterling cable this morning after yesterday's significant sell-off. So we're bouncing up. And again, the low we took yesterday, this morning, has all been tested at 130.10. So 130, we're in striking distance of that one as well. These round numbers, I talk about, and you should, keep check of them, guys, because they are significant. Some people say, oh, it's old-fashioned and all the rest of it, but, they still come into play. So the 130 zone has been very much in play with sterling, with just 10 pips above that. The low this morning, and that's a bit of a buffer before we get to 130, but directionless now after the main data of the day. And again, if we just go back to the 5 minutes, see how the sterling reacted to the ADP numbers. It was the opposite. There's the data comes out here, we move out, and it's gobbled that back. So sterling doing better than the euro versus the dollar, following those ADP numbers. And Kiwi is another one we had open that's was stopped out this morning on that reverse. Back up here, 56. I can't remember the actual. Again, can't remember the numbers, but we had a yen, Kiwi yen trade as well. It was closed out, as I said this morning, to the upside. So that's the Kiwi. That's the Forex pairs. Indices, as I say, yesterday, big shakeout, 2% down for the NASDAQ last night, having lost 4.46 of 1% on Monday. AMD results were okay, but we had some massive movers yesterday. Palantir lost nearly 8%. Nvidia was off nearly 4%. Tesla was off over 5%. Uber was down something like, excuse me, something like 9% at one point. Closed down 5%. Shopify off 7%. Lots of huge moves. The only bright spark was Yum Brands when it announced a refocusing of what it's going to do with its Pizza Hut brand. It actually leapt 7% yesterday. But AMD, having risen over 110% year to date, their shares were clobbered in after hours trading as well. So we were down 1.2% on the S&P 500, 6771 the cash market closed. The NASDAQ was off a huge 2.04%, the worst day since the April Liberation Day. But as you can see here on the 5-minute chart, we've come back quite aggressively. So that's the 5 minutes. Do the hourly chart. That was yesterday's sell-off in the afternoon. We've recovered a tad here in the futures market. We're still an hour away from live trading, but we're back to 25,400 from that low of 25,100. So again, round number of 25,000 coming into play, and I'll just leave that on there on the NASDAQ 100. Remember, this is more volatile. 1, 2, 3, 25,000. just off this chart. There we are. So we didn't quite get there yesterday, but we did get to 25,200, and we bounced off that so far today. So again, another one that's been positive in the last 4 hours, but again, you see, didn't break the 20 there, didn't break the 20 to the upside. It provided the resistance, and the start of the cash session here on this candle here took us all the way down. And we've got resistance now exactly where we sit here, 24,400. So the buyers buying the dip, but the dips are getting lower. Let's just look at these. The 4-hour time frame. You can see the quite a significant aggressive sell-off, and we go up to the daily. You can see, we had a massive rally. It's understandably people banking profits, traders banking profits. That gap from the 24th to the 25th there filled now, and sorry, let's just, here we are. It's been a massive storming rally, but when it sells off, it can be really aggressive. That was Trump's toys out of the cot, non-extra tariffs on China and no peace Nobel Prize for him on that Friday, and down went stocks, but we've come back really aggressively and then to new all-time highs. So yesterday's sell-off is piecemeal compared to that Friday, but it's still a significant day. It's a significant bodied candle yesterday. So watch that. Obviously, as I say, 25,000 is key here on an end-of-day basis on this particular strategy. The 21 EMA is providing support at 25,340, but it looks like we're maybe getting across on the 5 and the 9 today, but whether we actually go under the 21 is the next step. So it's still holding on to the longs, this ramp up, but certainly, all of that profit was banked on the close of that candle yesterday, and that gap's been closed, so we could see another bounce up. Similar pattern on the Dow, and there's that trade we were long we took out here on Friday, on Monday. And we've continued to move down, but again, another one that's testing its 20-day moving average yesterday. We were trading under it at some point yesterday, and again today we've tested it. S&P, similar setup, but a bit weaker. It's a rounding top, it's more significant. And again, see where we go from here. Still plenty of companies still to report. The earnings season has been very strong. It's the first week of November. Repackaging of positions as we run into the looking at the year end. We're now in week 45, aren't we, of 52? So profit's not a profit till it's till the trade is closed. Paper profits. If you've been long, this one from all the way back here at earlier in the year. When do you take your profits? Some were obviously shook out on the 10th. Others would have closed out as we got to the end of the month, and then some rebalancing of portfolios potentially here at the beginning of November. But it is typically two of the strongest consecutive months of the year, November, December. But we have had a massive rally, so it may fly in the face of things. The tariff numbers may start to tighten up. Who knows? They haven't yet. It was 2018, the last Trump administration. It had a poor December. The last time we had a poor December for the stock markets was then. It was all about tariffs, but the tariffs are in a different stratosphere now. And even with that news from China yesterday, they were relaxing their or confirming what was agreed with Trump and Xi last week to 47% tariffs for imported goods into the United States and 24% for tariffs into China from the United States. So don't panic too much, but see what the 20-day and then say I've got a 50-day. If I just insert a 50-day and see, the higher time frame, 50 SMA. No, SMA smooth. Oh, Jesus, smooth. No, for the sake of don't want a 7. Let's give me a 7 for some reason. Remove. Okay. let's put the 50. It's a smart calculation, not that different, but you get the point. The 50-day moving average is still very, very well supported. So it's still a big rally, and it was only this April hoo-ha where we went into the 50-day. So anyway, nothing yet to panic about, but chatter from the people that matter, leaders of big corporate West. Sorry, I'm trying to close that. Remove. There we are. Corporate America. It was the head of Goldman Sachs, wasn't it, and head of J.P. Morgan, suggesting things are a bit highly valued, things are a bit twitchy, a bit frothy, and that's sort of triggered this move. There is signs of the broadening of the market, but it is still very much tech driven. So any news around AI, any news about OpenAI, all the hot stocks, Palantir, Nvidia, any deals that companies are doing with them, or potential deals, it's all still taken very, very positively. Anything else, there's a bit of a panic and a bit of a worry about. But anyway, stock markets remain bearish. In short, we have had a few. We have rolled over from high, so just watch and be aware. Don't get too. As I say, I'm out of those. We were long, a few of them, weren't we? And where I'm out, and I say the only skin in the game I've got at the moment is dollar CAD at the moment. If I look at end of day stuff for tonight, potentially, I'm gonna look at what might be coming up for tonight. But I say there's not a lot of news left today. As everyone's favorite gold, and that's just rammed, isn't it? There we go. So just go. There's the 390 level. I put 390 on there. You get a checkered one. Sorry, these are all set up on my other charts, but as I just open this up, my main reverting strategy wasn't playing. So there's our all-time high from the 17th to 18th of October, 4375, and down we have come very significantly, crashing through the 4,000 level, but 3,900 has provided a support zone. And you see here on an end of day basis, it's about $30 above that, around about 3,930 providing the end of day support. But we are weak. We have been under the 20 since the 27th. We had what looked like we were moving higher into the end of the month, but then we've come back down. So it's been a weak November relatively to this massive breakout rally we've seen for gold, but very volatile as we've come off quite aggressively. So a hold of 3.9 is key now. 4,000 provided a little resistance on the way up, provided a little support on the way down, but we've moved down quite significantly. So as I did yesterday, earlier in the week as well, with the other charts, if this indeed is the close of this leg to 3,900, we are still well short of the fib level from a retracement. So that is suggesting potentially still more weakness to the downside. So not only have we got the psychological 4,000 level to get back over and hold significantly, the next big line in the sand is that first key fib level, the 38.2 fib level, and that sits around about just shy of 4,100, 4,086. So that's what I'm looking forward for too. There's no trending direction now with gold. You would just be trading this on a mean reverting basis at the moment because of those higher time frames. Okay, let's have a quick look at what else is still to come today. I don't think there's much data. The main data was this ADP non-farm payroll. Again, as I said before in the introduction, it's got more emphasis simply because we've got no official government data. This is a private company with their jobs data. We have got Canadian jobs on Friday, and later today we've got the ISM and the S&P Standard & Poor's services PMIs for the United States as well. That's coming along in an hour or so. So watch that later on today. It says the JOLTS numbers, but again, I don't believe that's coming out today. Here it was actually due last week. Perhaps it is. I don't know because it's all. Some of them might have been come out. Weekly crude inventories as well later on today. And watch those central bankers. You know the sentiment soured on Monday following the combination of some comments from some of the central bankers, particularly some of the arch doves on the board. So watch that as well later on. But see what those services PMIs are like out the United States, having got those positive numbers from Europe and even China early on this morning at 52.6, better than tick better than expected, worse than last time. So China still struggling. Some big stimulus may be coming from the Chinese at some point. But anyway, watch those that data in say an hour or so, an hour and a quarter at 3 o'clock my time, and S&P 15 minutes before that. But the ISM data is the most important one at 3 o'clock. So watch that. We've got sort of sideways markets ahead of that. Gold 3975, so still shy of 4,000 by $24, but $75 above the bottom of the channel at 3,900. So again, that's having a okay day today. If we come down there, if anybody's trading gold today, I'm sure a lot of you are. But this strategy would have been short earlier. It went long there at 3 o'clock this morning, up, and then it took you out quite aggressively. Again, if the wicks would have taken you out earlier, but that's then closed out there, and it's then crossed again. Hang on a minute, that's messed up, isn't it? That's out of sync. Actually, I would be out of that one because that's out of sync. We've got the 5 and the 9, the 21 short. There's the 21. We got 21 5. Now we are now back in sync now that the 5's come there. So that was enough, and I would have gone. That would have taken you long there again at 12 o'clock on this hourly basis. That would have been another continuation to the upside. But we quite volatile to the backside. If you're trading this on a tighter time frame, let's come back to the 30-minute. That was long, then short, and then long again here. So that would have gone long there at 11:30. Your stop loss initially down at the bottom of that candle. As we've moved up, I'd have my stop loss still. I might have pulled it up a bit higher now at the 5 period moving average at 3,966. So stop loss at entry now because that's our entry there on that one. 30-minute, 15-minute, a bit more, might have still a bit more positive. 15-minute, there we are. The first trade was there. Stop loss below that might have initially, yes, it seems a little long, but yeah, it's chopped around for half an hour. Then it's gone nicely long there at 12:30. So that's long. Scalpers for gold today, all over the place a wee bit here with this strategy. Long, short, long again there at 11:55. You got this, that would have wiped you out. Another long one there. Yeah, it's chopping, but it's positive. It's relatively positive, but big moves on the gold market there as the ADP data came out on this time frame. So that would have taken you out if you'd pulled the stop loss up too quickly, because it should have been there. You got in there as it's gone long. Stop loss really technically we're at the bottom of that wick there, the 11:12:50 one there. So that's your last entry there would have been the 12:55 candle. Stop loss naturally would have been there. It should have really been there, but would have been there. So you're still in that. It's gone up again, and you might have pulled the stop loss up to the bottom of the entry can. That would have taken you out on the data if you'd left it in for the day, but then it's gone long again. So again, you could have taken another continuation trade there at right at the top there at 3,975.60, but then it's gone against you, but your stop loss is down there, so you're still in the money on that one. But quite volatile, but biased up there on that 5-minute time frame. If you again, it's the vagrancies of trading your news, my friends, and gold can be quite volatile as well. Anyway, that's enough for me today. Take care, my friends. If you're new to the prop trade, do come and join us. Open a challenge. They're very straightforward. A few $100 gets you some meaty accounts. If I go back to the evaluation platform, you got two options. You can have a two-phase approach, which is our standard approach. The targets are a bit not as difficult as they are, not as tight, or it's not as difficult, I suppose, is the correct word. So standard challenge is our standard, our most preferred, where most of our clients are two-step challenge. You can start from only a $5,000 account that costs you less than, just over $40. If you're, it's 55 is the retail price, but new 25 if you are new to us, gets you started for just over $40. I would argue, get a bigger account, save up a bit more, save up another $40, get a bigger account. 10,000, 25,000 is a good size. $131. That's what you want, sort of size of account you want to be looking for. Then you need to get a target of 8% of the account. So $25,000, 8% of $25,000, $2,000 on step one. That gets you to step two. Step two, you only need a 5% target, $1,025. So long as you're not losing anything like 5% or 10% of the total trading account over the time that you're trading, you then get yourself to a funded account if you get to your 5% target following the 8% target. And then, you can trade again, still trade in the same vein, because you've still got the daily loss and the maximum loss targets. But, when you then want to think, I've had enough, 80% of your profits become yours. You can request them up to midnight Thursday. You'll get paid them the following day, Friday. And you can do that in every week. Obviously, there's some rules when you first start trading, and then the second time you do it, you actually get your fee back. You're actually a refund of your fee you get back, so you get your $131 back after you've done that, been successful with 2 weeks on your funded account. So, and then the sky is literally your target there. There is no ceiling with this approach. So if you find something that's working for you, you stick to the rules. You don't get too aggressive. You don't get too one-sided, too focused on one asset or one particular approach. There's no holding you back, my friends, and it's we're allowing you to make real money from these simulated accounts. So we want you to be successful because we want to grow the company, and we want you to tell your friends and your affiliates and your family and all your associates to come and trade with the prop trade. Okay, take care, my friends. I'll see you tomorrow. Tomorrow, where are we tomorrow? It's the Canada. I've lost the Canada. Tomorrow's Thursday. I don't know what I'm doing tomorrow, actually. I said I'll see you tomorrow. Quick check what's on the agenda for tomorrow. On my calendar for tomorrow, Friday is obviously going to be a weekly wrap up. It's normally there was something significant tomorrow, and I can't read. It's not on my paper calendar here. Tomorrow, what's tomorrow? It's Bank of England, of course it is. I'm going to forget that. So I'll be with you for the Bank of England announcement tomorrow. Again, a bit like the RBA and the RBN earlier this week, last week, and the RBN said no change from the Bank of England. But of all the monetary policy committees, the Bank of England one can be the most dissident, or have most dissidents on. There's been lots of chatter here in London about that, but it looks like nothing's going to happen tomorrow. But I'll see you from 11:45 tomorrow for the Bank of England announcement out from London. Again, these weekly data, this isn't happening tomorrow. The weekly claims, the only jobs numbers we got are the ones from the ADP today, showing relative better numbers than was expected, but still, much reduced from earlier in the year. Okay, so take care. I'll see you all tomorrow. Trade carefully, and as ever, may the pips be with you, my friends. All the best. Bye bye.